only on Bloomberg Quint.
Hello and welcome. This is the Market Wrap. I am Agam Vakil. Well, the markets and the benchmark specifically in this case have snapped a three-day gaining streak, with the benchmark indices declining by as much as 0.5%, the Nifty losing out nearly 55 points, but not without positive cues coming in from the auto sector. A point in case being M&M, Mahindra and Mahindra advancing by as much as 3% on the back of strong earnings. But GAIL and HCL Technologies not too far behind, also contributing to, well, less damage when it comes to the indices. What's really bearing down on the indices today was State Bank of India and ICICI Bank, along with Yes Bank from the banking space, and Bajaj Finserv to a certain extent from the NBFC arena. When it comes to the broader markets in the Nifty 500 too, we're looking at 2 gainers as against 3 losers. So the market breadth once again has changed towards the negative, and what we're looking at is a further decline in 1% beverages out here. As you can see, locked in another lower circuit of 20%. Kaplan Point Laboratories down 10%, DB Realty also down 6%, along with several other stocks. Jubilant Foodworks looking at some profit taking. Uflex on the upside, gaining around 10.5%. Indigo Remedies up 7.5%, along with Radico Khaitan, which took off specifically in the latter half of the session, and UCO Bank, well, moving against the relative weakness that we've seen in the rest of the public sector banks. Let's get in Neeraj Shah, markets editor, to get us a perspective about what's going on. Neeraj, how's the day been, and how are you reading these variables now?
Interesting. Agam, in the morning, almost every guest, all the 3 guests, if I'm not wrong, mentioned about how the PSU banking space looks set for some more upsides. The trading bets were on the long side on the PSU banking space, and that's the pocket that has got hit the most. So serious profit booking that has come in. The FNO turnover, for example, today is nudging the 10 lakh crore mark.
Right.
Want to presume that while it's expiry week as well, the 2 days before expiry, such high turnover would probably mean that there was a fair bit of long unwinding that would have taken place. So let's wait and watch. Maybe some fresh shorts piled on as well into select banks. So I would suspect that would be the case. But routine profit booking, 3 strong days, so 1 day of weakness is probably taken on board. Need to also be happy about the fact that the mid caps and the small caps haven't corrected as much.
Right.
So they were doing pretty okay in the session today. But high flyers have come back. Jubilant Foodworks, a case in point. A clutch of other names have seen some profit booking. So interesting moves there. But I reckon some more idea about what could happen would be only visible tomorrow, whether the banks continue to see the hammering in the run-up to the expiry. Just one heartening thing is what's happening to the old economy stocks. I'm sounding like a broken record today. I've spoken about this 4 or 5 times, but we saw what happened with L&T and NTPC in trade yesterday.
Right.
We've seen what's happened with BHEL today. Now, if Power Grid were to come out with a decent set of numbers as well, though Coal India was a small miss, but that's a different kettle of fish altogether, then old economy is showing some signs of a pullback, which might just be good. We're talking about ending the earnings season on a good note. We need old economy stocks to perform well. Hopefully they do.
All right. Well, Neeraj, thanks for bringing us that perspective.
Thanks, Aga.
Watch out for some of these cues, especially on the back of earnings, which will come out in the last 2 days. That said, let's take a look at what our technical experts are telling us about the different levels to watch out for on the benchmark indices. This is what they have to say.
Today's high is now going to act as a very crucial resistance because technically looking at the charts, the pullback that was there was more on the lines of the Nifty and the major indices being in the oversold territory and also being around key support levels. But sustaining above the 10,700, 720 mark, that is something which is going to be something very crucial and important. Because if it is not able to sustain above that level, then we're likely to see or witness some selling pressure coming coming in the indices and also in the stocks. And then the next level of support would come around 10,540 to 560. That would be a level of support. But yes, I see that 10,700, 720 seems to be capped at the moment. So we could trading above that only would mean that the upside would resume. Otherwise, we'll see some fresh selling coming into the market.
The way we have reacted from the lows of around 10,410, this looks like an emerging new impulse, and probably one should wait it out. Probably one has to, review the trend only below 10,550. Until then, I think the bias should be positive, and every decline should be utilized to, create long positions so far as Nifty is concerned.
Well, talking about stocks specifically, Larsen & Toubro came out with earnings yesterday, and they were, well, relatively good numbers with respect to expectations. We also had a lot of broking houses come out with their view on the numbers as well as the guidance that the L&T has given out. We have Yash Upadhyay to give us an idea about how the street is viewing. Yash?
So first up, we have CLSA and Credit Suisse. They've both come out with their reports on L&T. Let me take you through what CLSA has to say. Now, they have maintained the buy rating on the stock and have set a target price of 1,730 rupees, indicating a potential upside of 25% from its previous day's close. Now, it was a strong quarter for L&T, beating all analyst expectations for the fourth quarter, driven by a good order inflow and margins guidance. That apart, the hydrocarbons business, that has posted a strong growth in the fourth quarter, growing by about 6% on a year-on-year basis, despite of a higher base in the same quarter last year and challenging global environment. They also believe that the company is a good proxy for the domestic capex with a credible strategy to improve their return on equity. That apart, we are also looking at Credit Suisse. They too have maintained the outperform rating on the stock and have left the target price unchanged at 1,700 rupees, indicating a potential upside of 23% from its previous day's close. The strong quarter, that was driven by the improvement in its infra segment. The margins, they have come in as a big positive, along with improvement in their working capital cycle. A strong order inflow guidance by the management in the range of 10 to 11% for FY19, and a revenue growth guidance of about 12 to 15% is what the management has to say. Back to you.
All right, thanks Yash for bringing on those details. We did see L&T start off quite substantially strong, but it gave off a lot of gains eventually. But we have a bunch of stocks from the mining and the metal space which are also in focus. Vedanta with more updates from Tuticorin. We have Nikki Mirchandani joining us to give us an idea about what's going on there. Nikki.
It's a flat close for Vedanta. Finally, I think more of a sentiment impact that we saw rather than the value impact after the Tamil Nadu government ordered a closure of the copper smelter at Tamil Nadu, which has got to do with the company's overall financials. If you look at the total value that this plant typically contributes to the overall consolidated revenue of Vedanta, you would see that is almost 27% in FY18 as compared to 29%. That's dwindling there. And also if you look at the EBITDA performance, it's just 5.2% in FY18 as compared to 7% there. Going forward to brokerages, most of them suggest that this is not expected to have a really big impact on the company, and the impact is limited to 3 to 4% of the company's overall EBITDA. However, going till some clarity emerges in terms of the future course of action taken by the company, there is expected to remain some kind of overhang over the stock, at least for the near term.
And how are Coal India's numbers, Nikki?
Well, on the face of it, Agam, they look to be a little disappointing, but then adjusted for employee benefit expenses, there seem to be fair enough, I would say. If you look at the top line growth, we're looking at a 15% growth there, but then that's missed the estimate. We were working with a number of 24,720 odd crore. The number came in at 26,909 crores. So top line was clear miss. In terms of EBITDA, year-on-year basis, we saw a 94% decline. Now that's mainly on account of your employee benefit expenses, which is a percent to your net sales, shot up to as much as 66% from 41% that we saw in the corresponding quarter. We also saw the profitability of the company coming down by as much as 53% to a number of around 1,295 crore. But this was despite some kind of tax credit of as much as 142 crore in this quarter as compared to the tax expense that we saw in the previous. But then net, if you'd see, I would call these numbers a mixed bag because the top line was a miss, and operationally we don't know as much because the employee benefit expenses as a percent of net sales was a bloated figure. Right.
Well, it's a mixed quarter for Coal India. Thanks, Nikki, for bringing us those details. So plenty of stocks out there where we had for focus on in today's day of trade, with the benchmark indices ending marginally in the red. But that's a wrap on the markets. Don't go anywhere. Lots more lineups, so stay tuned in a Bloomberg Quint.